Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about COCA COLA CO quarterly report. The Coca-Cola Company offers a diverse range of beverages and services to consumers worldwide. Some of the key businesses and services provided by the company include non-alcoholic beverages such as sparkling soft drinks and flavors, water, sports, coffee and tea juice, value-added dairy, and plant-based beverages, beverage concentrates and syrups for fountain retailers, fountain syrups to restaurants and convenience stores. The company sells its products under various brands including Coca-Cola, Fanta, Sprite, Simply, Fresca, Schweppes, and many others. The Coca-Cola Company's KO stock price has increased by 7.05% over the past year due to several key events and announcements. A significant contributor was the robust fourth quarter 2024 earnings report, which showed a 6% year-over-year increase in total revenue and a 12% rise in organic revenue. The company also raised its annual dividend by 5.2%, further boosting investor confidence. Additionally, Coca-Cola's enduring brand strength, strategic initiatives, and consistent dividend growth have contributed to the stock price increase. The company's revised 2024 guidance, forecasting strong organic revenue growth and comparable EPS growth, has also been a positive factor. Overall, these events have led to a steady rise in Coca-Cola's stock price over the past year. The primary drivers of revenue growth or decline can be summarized into several key factors. Revenue growth is primarily driven by beverage unit case growth, pricing, and concentrate operations. Additionally, favorable foreign currency contracts, net investment hedges, and economic hedging strategies have contributed to revenue growth. The company has also seen growth in various regions such as Europe, Middle East and Africa, North America, and Asia Pacific. On the other hand, revenue decline is primarily driven by volume/mix, cost of goods sold, and selling, general and administrative expenses. Foreign currency contracts losses, commodity contracts gains, net investment hedges losses, and economic hedging strategy losses have also contributed to revenue decline. Uncertainty around tax audits and increase in long-term debt have further negatively impacted revenue growth. Overall, the company's revenue growth is driven by a combination of internal factors, such as pricing and concentrate operations, as well as external factors such as foreign currency contracts and economic hedging strategies. Conversely, revenue decline is primarily driven by internal factors, such as cost of goods sold and selling expenses, as well as external factors, such as foreign currency losses and commodity gains. Net income for the Coca-Cola Company increased significantly in the 3 months ended September 26, 2025, rising by 29% to $3.7 billion compared to the same period in 2024. This growth was also observed over a 9-month period, with a 28% increase to $10.8 billion. Profit margins showed mixed results across different segments and categories. The company's operating income margin increased from 21.2% to 31.7%, while its gross profit margin decreased slightly from 61.1% to 60.6%. Net income margin remained relatively stable at 30.3%. The reasons behind these changes can be attributed to an increase in operating cash flow and a decrease in significant losses, as well as foreign currency translation adjustments and other comprehensive income. Segment-wise analysis revealed that Europe, Middle East and Africa, Latin America, and North America experienced decreases in profit margins, while Asia Pacific saw a slight improvement. However, some segments showed positive growth in operating margin due to favorable pricing initiatives and higher concentrate sales volume. Overall, the company's net income and profit margins have undergone significant changes, driven by various factors including operational improvements and external market conditions. The company's financial performance indicates a consistent generation of positive operating cash flow. The data from various sections of the report confirms this trend. For instance, the net cash provided by operating activities for both 9 months ended September 26, 2025 and September 27, 2024 are positive at $3,652 million and $2,854 million respectively. Additionally, the company's operating cash flow for 2024 is reported to be $14,161 million. Furthermore, the significant operating cash flows generated through trade accounts receivables factoring program in both 2025, $11.822 billion, and 2024, $16.015 billion, also support this conclusion. Overall, these figures demonstrate that the company is successfully generating positive operating cash flow. The company's debt level has undergone significant changes over time. Initially, long-term debt increased from $903 million to $2,441 million, page 8. However, a subsequent report showed that the debt level had decreased to $1,992 million by page 17. The carrying value of long-term debt also saw an increase from $43,023 million to $45,097 million on page 32. In contrast, interest expenses have shown mixed results. For the 3 months ended September 26, 2025, interest expense increased to $2 and then $5 for the 9 months, page 24. However, a separate report indicated that interest expense decreased by $34 million, 8%, for the 3 months, page 47. The net change in debt level and interest expenses is also mixed. While debt balances have increased, this increase was partially offset by the decrease in interest expense, page 48. Overall, there are conflicting signals regarding changes in debt level and interest expenses. Management's outlook on company strategy. According to management, the company's outlook and strategy are centered around driving net revenue growth through pricing, volume growth, and mix. The company's unit case volume performance is a key indicator of its underlying strength, with growth seen in various segments such as sparkling flavors, water, sports drinks, coffee, tea, and energy drinks. Management's strategy includes favorable pricing initiatives, inflationary pricing, geographic expansion, and acquisitions and divestitures to drive growth. The company will continue to monitor developments on certain key initiatives, but notes that the timeline for implementation remains uncertain. Notably, management is optimistic about its prospects in tax litigation, estimating a potential aggregate remaining incremental tax and interest liability of approximately $12 billion for the tax years 2010 through 2024. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In recent years, the company has paid dividends totaling $8,665 million in 2025 and $8,548 million in 2024. Additionally, the company has repurchased shares, with 8 million shares bought back at an average cost of $67.14 per share in 2025, and 18 million shares bought back at an average cost of $63.03 per share in 2024. Concerns about inventory buildup in the supply chain. The company's financial summary highlights concerns regarding inventory buildup and potential supply chain disruptions. Specifically, raw materials and packaging inventory increased by $43 million from December 31, 2024, indicating a significant accumulation of stock. Furthermore, bottlers' inventory practices may impact unit case volume versus concentrate sales volume, suggesting that the excess inventory could lead to inefficiencies in the distribution process. These issues raise concerns about the company's ability to manage its supply chain effectively and potentially disrupt future operations. That concludes the financial summary for Coca-Cola Co. Feel free to comment below, and I will be happy to answer them when possible.